Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, couple of words on the gold market as usual. Gold market right now behaves absolutely normal and reasonable. So after market has completed important targets and even has exceeded it due to the momentum and strong demand on the safe haven assets, it has turned to some logical retracement because market right now really strongly overbought on all time frames. Expect maybe monthly. So on the weekly chart, on the daily chart, market strongly overbought, and its retracement should start sometime, and it has started. Also, that could be the one reason. Also, could be just profit taking, since this is really big rally compared to all other stuff that we've got on the gold market recently. Now the major question: what will be next? So currently, guys, a lot of relations stand in the mass media, on the TV, on CNBC, Bloomberg TV. So this Goldman Sachs tells that rally was probably occasional, and this will not take the long-term development. So probably it should fade out right now, and gold really could return back to the 10,000 to the 1,000 marking. So we call you to not believe in this relations in this speech, because we see that the real big shifts right now is happening in the global financial markets, and this is not occasional, and this we see the many reasons for that. And one of the reasons is that the global financial system takes the serious care on the Chinese economy. Recently, we have discussed a very important moment. Maybe it was not really has big the resonance in the mass media, but this really shows what could happen. So recently we said that the HSBC, one of the big whales of the financial global system, is the this is the English bank. HSBC, it has denied to change the location from the London to the Hong Kong. But what is HSBC? HSBC is the Hong Kong and the Shanghai Banking Corporation, and they said no, we will not move to the Hong Kong. Why? Now guys, take a look at the reserves of the China. I will show you this chart. This is China foreign exchange reserves. Take a look at what has happened in 2015. This is $4 trillion, $3 trillion dollars, actual United States dollar billions. So the China has flamed approximately the 1 trillion of its foreign exchange reserves in the 2015 and the beginning of 2016. It means that right now China stands on the impact of the global financial system, and they would like to take all that China has accumulated and saved in the previous years on its big export. So when they get the export, they put their money in the United States treasuries, in different other foreign exchange reserves. Maybe some part have been put in gold, but most of this stands in some financial instruments such as bonds, maybe some other assets. Now the global financial system would like to extract these reserves, because that's why the China stands right now on the impact. They would like to get this money, and this takes on the different directions. So first of all, this comes on the financial markets, when this stands the speculative attack on the China's equity market. We know about that, as it has taken place in the last year. Second is the national currency. It stands on the impact, and China needs to burn their reserve to support its currency. And by this action, by these instruments and tools, the West financial markets West financial corporations and global financial system, let's call it in this manner, but you understand what I'm talking about, would like to take all reserves that China has accumulated on the successful years of working in manufacturing and sending their goods and services out from the country to the United States, to the Europe. Now the West would like to take back the assets that they have that was given to the China. Also, take a look what is going on right now on export and import on the China economy. So this is an article in Russian, but the charts in English, so you understand what I'm talking. So China export on year or on a year basis has dropped 6%, import has dropped 14%, and has started in the 2010 to 15. Okay. So last drop has happened in the January and has dropped for 11% China export year-over-year basis. It's 11%. And take a look what the impact stands right now on the economy. That was previously 2010, 11, 12, 13, 14, 15, and 16 year. So that's why the Goldman Sachs tells that it's temporal problems with the China economy, and this probably will be fixed. That's why gold hardly will take this rally, or hardly will continue to move higher. But guys, such sort of events, that no country will not burn the 1 trillion of their reserves just occasionally, and it means that hardly situation will be better in the nearest time with the China economy. That's why we do not believe much in the words of the Goldman Sachs that the situation on the gold market will turn down, and this is just the occasional rally. We see the big shifts right now on the financial markets. Another hint to you: just plot the chart of the gold to crude oil, the cost of the gold in the barrels, and you will see what we're talking about. It's not just occasional action. That's why we think that as rally on the Japanese yen, as rally on the gold market will continue, but when this retracement will be over. So now let's talk on the retracement on the short-term perspective. So first leg down has happened. The market has dropped lower, and take a look. It has closed below the green line. That is the 3x3 moving average. Theoretically, we already have the brand body context for trading. So here we could get some upward action, for example, and maybe after that we will get A, B, C, D, another leg down. But right now, guys, I'm not sure that market already has finished the downward action. I will explain. So take a look what we've got right now. Market is forming the bullish grabber on the daily chart. If this grabber will be completed, it will tell us that we should get either upward continuation and taken out of this top, because this is the target of the grabber, or we should get the failure of the grabber. There's two possible results. Currently, guys, I am not sure that grabber will work, because market was really strongly overbought on the weekly chart, and it's not really sufficient retracement yet has happened just to take by the gold another leg to the upside and taking off this top. Maybe this could happen only if some really global unexpected event will happen, something really serious on the Middle East or something somewhere else. This could happen, but based on the pure technical picture, I still think that another leg down should happen after some retracement here. That's why we probably should not get the grabber. I think you understand the logic, the conclusion of the logic chain. So it means that market should not form the grabber here, and maybe we will see shy minor continuation to the downside before this real brand body will start. That's what I'm talking about. Because we have still 2 days in reserve with the closing below the 3x3 before brand body could start, because we know that the market should start brand body trade with the 3 closes below the 3x3. First close we've got yesterday, but it doesn't mean that market should start move immediately. It could stand here for a couple of sessions more before the bounce will happen. I am talking about it because I see the picture on the intraday chart. So take a look at the 4-hour time frame chart. On the 4-hour time frame chart, this upward action looks very, very small. It's better even to take a look on hourly. On the hourly chart, take a look how this action develops. It's not really upward continuation. It's not really something thrusting, because the target of this upward action should be 1235. This is the target of the bread and butter. But if market will reach this area, we should get simultaneously the grabber. And if we will get the grabber, then we will take out of this top. And market definitely is not ready for that yet. That's why I believe that we should not get this upward action right to this area. We should not get the grabber today. But instead of that, my personal feeling is that we should get another couple of sessions to the downside. They will be probably smooth and gradual. They hardly will be very fast dropping. But I mostly feel that before this retracement right to this area will happen, we probably should get another low, minor low. And I think that we could retrace down to the 1180 area. So 1180 will be the completion of this butterfly. Currently it's still possible to form. This will be very close to the weekly pivot support one, and it's normal. Retracement to the weekly support on a long-term bull trend. That's normal. And guys, also take a look at the daily chart. 1180 is the yearly pivot point. That's why personally I don't want to take long right now, because this upward action is not really impressive, and it absolutely doesn't prove anything. It doesn't tell that this is a starting point with the bread and butter. Instead of that, I would better wait for a couple of sessions, or at least till the end of the today's session, and see what will happen. I really feel that we could get another minor move down, so not real significant, but market really could create the new low before real upward action will start. Besides, the pairing of the butterfly here seems absolutely reasonable, because we need some reversal pattern that could trigger upward action on the daily, the bread and butter. And currently would not have it. This is very difficult to call as the ABCD retracement or something. It's really very weak upward action. That's been said, we call you to not take the long right now and wait what will happen tomorrow, today and tomorrow, because we have really suspect that market really could form some kind of the butterfly and shows another minor leg down to the 1180. Here, if it will really happen, that will be much better entry point for the possible bread and butter trade than right now. That's our current view on the gold market.